In terms of value, in terms of upside potential, in terms of asymmetrical risk reward, I just still think it's hard to ignore the value that has been created through suppression on COMEX and the LBMA. And that seems to me it's being challenged. These countries were not in a position to do so. They are now, and they're coordinated as well. They're coordinated and very wealthy, and they understand what we're doing, and that this is a better thing to hold. As Zoltan Pozsar said, Bretton Woods 3, it's not about debt instruments like U.S. Treasuries and inflating U.S. dollars. It's about commodities, and that's the progression we're seeing. So to me, yeah, silver is the value of a generation. I would switch a large portion of that to gold if we saw a 40-ish to 1 or better, 42, 43 to 1 or lower silver to gold ratio. It's a double.
Silver prices rose above $31.20 per ounce as geopolitical tensions, including Ukraine-Russia and Gaza, increased demand for safe haven metals. Despite the temporary recovery, analysts remain cautious, noting that the Federal Reserve's upcoming decisions and developments in key global conflicts will be critical in determining the next phase of silver's price trajectory. Global expert and trader Andy Schectman highlights that the Bank of Russia plans to accumulate silver daily for a month, an unprecedented government move. He notes India's massive silver purchases of 800 to 900 million ounces in 3 years, and China's aggressive sourcing of silver directly from Latin American mines, showcasing strong global demand. However, Andy advises leveraging the silver-to-gold ratio, expecting it to return to 40 to 1, offering a chance to double investments with low risk. According to a recent report by Value Research, if you had invested in silver on January 1st, 2024, you would be 30% richer as of November 3rd, 2024. In comparison, an investment in gold during the same period would have grown by 24.63%. Describing silver as the trade of a generation, Andy foresees substantial upside potential. The story of silver price suppression by major financial institutions reads like a financial thriller, yet it's documented fact rather than fiction. For decades, a small group of powerful banks has maintained massive short positions in silver, effectively acting as a cartel to control and suppress prices. As silver prices rise, these banks face potential billions in losses on their short positions. This could mark the end of the banking cartel's long-running scheme to suppress silver prices. The true price of silver, long hidden by manipulation, may soon be revealed. While bullish on silver, Andy emphasizes that gold remains the ultimate asset for stability and its potential revaluation tied to a new financial system. He notes that BRICS nations challenge Western control of commodity pricing through independent mechanisms. Now, we present the clips of Andy Schectman's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Let's not forget that the Bank of Russia came out and said they are going to start accumulating silver every day for the next month, adding it to their strategic stockpile. That was something that was somewhat shocking. We've never heard that from a government, really, to my knowledge, before. You have India that is who has bought, I don't know, between 800 and 900 million ounces of silver over the last 3 years. They're buying it at levels that far exceed any central bank purchasing. You have China, as I mentioned in an interview I did with Sean Kuhn from Dolly Varden, who confirmed they're flying all around Latin America, buying doré and concentrate from the miners directly. They're the second largest producer of silver in the world. And David Morgan said, well, they'll actually tell you they're the first largest. Who knows? But the point of it is that you are seeing governments accumulate silver and it being bled dry from the exchanges across the globe. To me, it represents maybe the best value I've ever seen, ever, in any commodity. But in the end, you're right. In the end, gold is the only other tier 1 reserve asset. I wouldn't count gold out. But when we talk about, value, it's pretty darn hard to ignore the value that is found in silver. When the dust settles, I think the place to be is gold, and you play that silver to gold ratio. To me, it's the trade of a generation. When someone says to you, you can double your position, it usually comes with great risk. I look at the silver play as one of the greatest asymmetrical risk reward trades I've ever seen, meaning low downside, high upside. Musk was on with Joe Rogan recently and said that you could create, I think it was a 100-mile by 100-mile grid of solar panels. You could power the entire United States. If you pull it up, just Google it, it'll pop right up. It's about a 20-second clip. And with a guy like him in there with that kind of pull, who knows what the future is for silver. I do know that when 8 commercial banks hold the largest short position that of any commodity traded on COMEX, as Ed Steer showed on an interview with your father not too long ago, you ask yourself, why the hell would they do that? Why would 8 banks be shorting a commodity like that naked, meaning they don't have the silver to back it up? For what reason would they risk that? And why is there between 4 and 6 billion ounces short on the LBMA? I think these kinds of manipulations that the West has been involved with for a very long time is being exploited by these countries slowly. So I think it's the trade of a generation. And I think the silver to gold swap is as good of a speculation as I've ever seen in my career. With, the worst case, you're stuck with silver, who cares? But the likelihood of seeing a 40-ish to 1 ratio where its price is average for almost 200 years, that's just a double is reaching average. And that would still be 6 times higher than it's coming out of the ground at 7 to 1 and decreasing. And another 260 million ounce shortfall this year in silver, according to the supply demand numbers out of the Silver Institute, who again omit military usage of silver. This is why the banks are short. This is why the Western banks are shorting, because the military industrial complex, which is very powerful and very influential, needs silver to make high-tech weapons, and they're all Western based. And this is what these other countries understand. They get it. And I often say it's the comment made by the gentleman who is running, I guess you could say, the progression of the BRICS grain exchange, where he says we produce and consume more grain than the West does, but we can't control the price. It's controlled on COMEX. With the development of this grain exchange, that will change. They understand what we're doing in precious metals as well and using it against us. So to me, gold is the ultimate place to be in the end. If I had only one trade to make, period, it would probably be in gold, because it is the only other tier 1 asset in the world. And I think when you're making decisions like this, maybe profit isn't your primary concern, although I think gold will go higher than people think possible, because it will go much higher to be pegged to a new system.
Andy Schectman expresses cautious optimism regarding the country's future, but warns of a looming debt crisis from unsustainable borrowing and rising interest payments. He predicts potential hyperinflation or even policies like gold-backed policies to restore confidence in U.S. debt. TD analysts say that the U.S. federal government's structural deficits are projected to drive its debt-to-GDP ratio to 100% in 2024 and 122% by 2034. This steep rise translates to an estimated $22 trillion or 85% increase in the supply of U.S. treasuries over the next decade. The U.S. dollar's reserve currency status continues to underpin global demand for treasuries. Yet analysts warn that persistently higher deficits and increasingly price-sensitive buyers could lead to elevated market volatility and upward pressure on interest rates in the years ahead. Meanwhile, Andy underscores the importance of commodities, especially gold, as inflation boosts their value over other assets. He warns that the declining global demand for U.S. treasuries could force the Federal Reserve to intervene. Let's get back to the interview.
Future of the country, more so than I have been for the last 4 years. But that doesn't mean that we don't have to go through some event, whether it be orderly, which probably not, or somewhat chaotic, whether it be a depression or a hyperinflation or a combination of the both, where it's hyperstagflation, where the Great Depression 2.0 meets the printing press. One way or the other, you have to pay your bar tab. And I think that's coming, and I think the world understands that, and they'll choose inflation over the very, very difficult decisions unless they're willing to slash military, slash Social Security, slash Medicare, slash pensions, slash military or veteran benefits. They're not going to do that. And if that be the case, then it will only increase amount of debt that is accumulating day by day by day to the tune of $3 billion a day increase. And even slashing all of the waste, the interest just on the accumulated debt is moving at such a pace that it will overwhelm by 2031 everything. It will be the largest line item across the board, only allowing them to make Medicare and Social Security payments, and everything else, all discretional items will have to be borrowed. And of course, that probably means higher taxes as well. So there will be pain to deal with. What that looks like, I don't know. And we'll get through to the other side. But what it also means is that we can expect, I think, a good deal of inflation, which should do very well for all commodities and will probably do well for stocks and cryptos too. Probably will. But in terms of measuring it in ounces of gold, my belief is that all of these things will fall in terms of its relation to an ounce of gold. And the rest of the world is done taking our treasuries. The appetite for our treasuries is completely and totally gone. And maybe you bring in a Judy Shelton to one of the Fed governor positions who has enough pull to actually introduce legislation to do the 30-year treasury redeemable in gold, as she speaks of, to give some form of incentive to hold our debt where you have to be out of your mind to buy a 10-year treasury right now. To me, it's uninvestable. Inflation being so much higher and there's so much risk in holding it, at some point, these kinds of things will need to be addressed. And when you have the level of indebtedness, we have the needing at least 10 trillion a year to finance debt that's rolling over and new debt. Who's going to buy all of those treasuries? Does it mean that ultimately it's the Federal Reserve, which is monetization, which creates hyperinflation? I mean, any way you cut it, we have to go through that period of darkness, of pain, of paying our bar tab. And I think there's no one better to administer that than Trump. But to think that the reasoning for holding commodities just vanished is a big mistake. And that's what the traders used to clean up a bunch of their short positions that were really butchering their balance sheet.
According to a report commissioned by the Silver Institute, silver is an ideal investment choice in the current challenging times because it can serve as a reliable hedge against inflation, currency devaluation, and systemic financial instability risks. As the world transitions to a more sustainable future, the demand for silver will only increase. Silver is poised to play a vital role in the 21st century with its unique combination of properties. What are your thoughts on the future of silver and gold in this rapidly evolving financial environment? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.